Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork to the TGIF. It's Friday today and June 28th. We got end of the month. Next week, we got a short week with Independence Day, 4th of July here in the U.S. So, short week next week as well. So, some good stuff out there for obviously our personal lives. Let's take a look. We can do got a couple economic news releases scheduled for today. And the first item is the Chicago PMI for the month of June. And this is the manufacturing in the Chicago region. And so we had basically a 58.7% growth last reporting back in May. And the forecast for this month was supposed to taper down a little bit down to 55, and it dropped a lot more than expected down to 51.6%. So anything above 50 is considered expansion. Anything below that is actually a contraction. So this is will be important to watch as we're on the verge of showing some contraction here after having a little bit of a lull in the market and then had a nice little spike in May, and now we're showing that coming back down. So hopefully it was an aberration. Hopefully we could see manufacturing tick upwards again. And last but not least, we got the consumer sentiment. This is the final version for the month of June. So we had an 82.7 rating on the index level earlier, and the forecast was supposed to come up a little bit to about 83, and it jumped up to 84.1. So if people are feeling a bit more optimistic about where things are at. It'll be kind of interesting to see how they feel in July when these numbers come out after seeing the stock market having some issues and all the things that were going on after the Fed was speaking and such. See how they feel a little bit further now. They have been watching this a lot, primarily because they want to see how people are feeling after the higher taxes, the sequestration, so there's more job losses. They're kind of watching these data over these few months as some of the stuff's kind of kicking in, and want to see how people are responding to it. If it's going to hold the economy back further, or if it's going to be still able to plug along at least slowly. So let's go ahead and jump ahead, and we'll go take a look at the headline news. And currently, the stock market's been down. They're still kind of digesting some of the stuff that's been repeated last week from the Fed, as well as some of the other Fed members that have been speaking since then. Speaking of since then, we had earlier today, Fed member Lacker had mentioned that there's more market volatility to be expected in the markets, but he doesn't forecast it to really create a prevent us from having at least a modest gain for the year. So they do expect some more volatility, but probably it will be very modest, at least for the next couple of years here, is what the projection. There's three more speakers coming out, so a lot of them have been kind of lambasting a little bit the investors for overreacting to the comments that were made last week. And so I think Wall Street's starting to show some signs of selling down a little bit after the overreaction last week, the emotional, and hopefully we'll get back to more of a logical basis on their investments. So we'll go ahead and take a look here at the bond market. We'll see what's going on with the interest rates today. As you can see, we're starting to see a trend. If you watched yesterday, we had about 4 days in a row that we had treading, and we had the nice thing is we actually went upwards yesterday, so that was kind of nice and did touch off the top. Today we start off about 30 basis points lower than where we left off, and even went further down and touched off the floor, as you can kind of see with the two red lines that run parallel. Touch off that, and then we're up more or less for the day. So right now we're actually just about 3 basis points for lower than where we left off yesterday so far. Now, if you're on the East Coast, you would have had rates out earlier, and the rates probably looked worse. But being on the West Coast, we're getting the rates about around 9ish or so in that time frame, and so the rates will probably look more like what we had left off yesterday. If they didn't do any price improvements yesterday, it'll go into today's price, and so depending on the lender on those scenarios. But technically, we will probably will be most likely on the West Coast, dealing with more West Coast here, about the same price where we left off yesterday. All right, folks, I hope you guys have a wonderful weekend. I appreciate you guys watching. Thank you very much, and we'll see you guys on Monday. Again, it'll be kind of a short week with the 4th of July and such. So you guys have a wonderful day and enjoy your weekend.